Hello and welcome. Yesterday, trading activity was rather subdued. The European currency was trading sideways. In the first half of the day, the euro tried to break through the level of 1.0990 and consolidate above it, but failed. In the second half of the day, the pair faced a sell-off which came as no surprise. The United States reported data on producer prices which turned out to be worse than expected. Besides, the ZEW Economic Research Institute released its economic sentiment indices for the euro area and Germany. The indicators proved to be downbeat. This is due to Russia's special operation in Ukraine as well as high inflation in the European region. Against this background, business sentiment fell sharply in Germany and European Union member states. Today's macroeconomic calendar is full of important releases. The focus of market participants will be on US retail sales data. The indicator is forecast to have dropped in February. In addition, investors are awaiting the third decision on interest rates. The regulator is expected to raise the rate by a quarter of a percentage point to 0.25 to 0.5%. Then Fed Chair Jerome Powell will hold a press conference. Some experts believe that the central bank will hike the interest rate by 0.5% today. This will create a strong buy signal for the US stock market and its national currency. However, it will be difficult enough for Powell to find an acceptable solution in the light of surging inflation, a slowdown in economic growth, and global geopolitical tensions. If the US Federal Reserve's decision and Powell's statement meet market expectations, the euro-dollar pair will hardly see major changes. The downtrend will probably remain in force. Moreover, I won't be surprised if the price breaks below 1.0929 and heads for monthly lows. From a technical point of view, it's worth focusing on the level of 1.0984. A false breakout will lead to an increase in the volume of short positions. If the price breaks through, fixes below and tests the 1.0929 marked from the bottom up, a sell signal will be created. Thus, the euro will slide to 1.0875 and 1.0810. Long positions at 1.0929 can be considered only amid a false breakout. Alternatively, it will be possible to go long at 1.0875 and 1.0810 on a rebound with a view to catching an intraday correction of 25-30 pips. If the price consolidates above 1.0984 and tested from the top down, the volume of long positions will increase and the euro will rise to 1.1041 and 1.1104. However, this scenario is likely only if the Fed adopts a loose policy stance. In the case of traders will be able to open short positions at 1.1104 on a rebound, counting on an intraday correction of 25-30 pips. Short positions from the level of 1.1041 can be considered only in the event of false breakout, and it's not clear how the market will react to today's third meeting. Speaking of the British currency, the pound-dollar pair is moving sideways as expected. Bears will strive to take control of 1.3023. If the price breaks through and tests this mark from the bottom up, a sell signal will be created. In this case, the pound sterling will most likely decline to 1.2966 and 1.2911, where it will be possible to open long positions on rebound. However, the British pound will hardly drop significantly following the third meeting, as tomorrow's macroeconomic calendar includes the Bank of England's interest rate decision. It's too difficult to predict the regulator's response to current inflation rates. Therefore, I recommend that you not rush to sell the pound sterling at lows so as not to fall into a trap. A false breakout at 1.3023 or consolidation above 1.3084 will create a buy signal, thus pushing the British currency up to the levels of 1.3138 and 1.3190. At the mark of 1.3190, it will be possible to open short positions on a rebound. Remember that a further strengthening in the value of point will depend tomorrow's BOE meeting, so be careful and good luck.